Good morning, everyone. Welcome to our Friday morning trading session. Made it to the end of another week. Things sure loosened up a little bit in the NASDAQ toward the end of yesterday. A very, very subdued morning session. This is what we were looking at all morning. The market made a little bit of a breakout and then started to fold in upon itself, gave us a pretty solid looking rule of three signal here on the Eagle before falling off sharply in the afternoon and stayed there pretty much until the close. Overnight, non-existent, and now we're opening pretty much where we left off, maybe with a teeny tiny opening gap below the market. But yeah, here we are. So we'll see whether or not the market gives us anything this morning. Right now, to me anyways, it looks like this current rally may be more of a, I don't know, a bear flag? What do you think? Had the big move down, and now we've got this rather extended bearish looking consolidation, which may end up breaking to the downside. See, the upward momentum seems to be struggling, doesn't it? At least right now, that's how it's looking. We'll give them a couple of minutes here to, excuse me, get their bearings. Here is the crude oil market on the Eagle. Crude oil a little bit on the bullish side yesterday, but really a dull session. Some of the bigger moves have been coming during the off hours, which is a little bit odd. Here was the overnight, and you can see we're sort of in a sideways trading range here for crude oil as well. I wouldn't be too keen to do much with it until it gets outside of that range. Well, we've had our first Eagle signal, our first in-sync Eagle signal right here. I let that one go by, but we do have an opportunity for a second push on this signal. Oops, maybe not. That's a little bit out of reach. What if I paired it a little bit tighter? Ooh, I can just get in there. Yikes. So the signal itself printing right here. The second push simply means we allow the signal to engage, and then we see where the market flinches. That becomes our signal bar. I don't know what it is about the Eagle, but that happens a lot where the signal prints, the market makes a little reaction. The Eagle really good at identifying a pretty sensitive area. You see here too, the market prints and then flinches, prints, and now we're flinching again. It's not to say it's not going to continue higher from here. Rather, we seem to have found a little area of tenderness, if you will. Now, the second push signal does get you in a little bit later. That's the downside, but the trade-off is hopefully we will see a little bit of momentum along with that. they come, just knocking them right back down. Right back down into the hard edge. Well, we should at the very least see a test of the extreme here. The extreme being this high. I was hoping we'd see a little bit more follow through this morning. Yesterday was so sideways during the morning session. We are producing some conflicting signals now. The eagle, of course, bullish, bearish here on the hawk. We're getting our first micro-macro cross lower. All right, while we're waiting on our trade, Francisco's asking, can you please go over each of the indicators in the hawk? Sure. All right, so your hawk scalper is made up of four components, really. The price, the bar color, the thin line, that's your micro line, your thick line, that's your macro line, and then your filter. Generally speaking, what you're looking for are signals where everything is in sync. So you're going to look for green bars, a green signal, green trend lines, and a green filter. Not all signals are created equal, however. Generally speaking, your best signals are going to be the ones that we consider the high probability signals. And if you haven't seen the what we call the cheat sheet, this is like a legend of the high probability signals. This is available at the members area, or you can email me or Adam, and we'll send that along to you. So these are the signals we're going to concentrate on. We're going to look for the first micro-macro cross signal, which occurs when the micro line crosses the macro line. It is the first signal where everything is in sync. A very, very powerful signal. After that, we have the macro pullback signal. Again, a very strong signal. It's easy to identify because everything stays in sync except the micro line. The micro line, the thin one, goes out of sync. After that, we're going to look for a 4-arrow consolidation. Oh, I shouldn't say it in that way because the signals don't always progress in this fashion, but we're also going to be on the lookout for a 4-arrow consolidation. Sometimes you're going to end up taking a signal and the market's going to end up drifting sideways. Well, sideways or slightly downward in an uptrend, or slightly upward in a downtrend. And what that is the 4-arrow consolidation, and we expect the market to move again off of the 4th signal. After the 4-arrow consolidation, we have the post-consolidation pattern, which very often will also become another macro pullback signal. And then last but not least, we have the red bar buy or green bar sells. These tend to develop near the end of a trend. And it is a signal you can take with trend, or you can plan to take the counter trend version of it. So here we have a first micro-macro cross signal. Here we have a macro pullback signal that did not engage. Here we have a red bar buy signal. So you can see how these signals start to develop around themselves. Here is another first micro-macro cross lower. Russell says it's also a 4-arrow consolidation, and it is. This first signal didn't print, but we do have 1, 2, 3, 4 signals that are printing, and then the market heads lower. From here, we may get a macro pullback signal or a green bar sell if the market drifts high enough. And we keep drifting lower. So it looks like my first eagle signal not going to work out for me today, and I should have taken, let's see if I've got an opportunity to roll my stop. No, not yet. Well, if we're in a sideways range, now depending how big the sideways range is, obviously I'm hoping the sideways range looks something like this. I can anticipate that some buying is going to go on near the bottom end of the range. And it's a reason for trying to run a deep stop. Okay, this is a very important juncture for the buyers. If they lose it here, well, they're going to run our stops, no question. Oh, get up there. No! Go away. Where's all the buying? Come on. I know there's got to be some buying down here somewhere. Come on. Get up there a bit. So our hawk now drifting into yellow bars. This is not a macro pullback signal because of the yellow bar. ay, ay. Where'd the buyers go? Yeah, Christian, you could be right. Christian says the buyers are already taking an early weekend. I think you could be right. They showed up at the beginning, but they've walked away. Stinkers. Well, we're holding what's resembling a low, but we're coming back here with another first micro macro cross. Now, those of you who are new to trading the hawk are going to say, "Whoa, hold on there a second, Eric. What? How can you call that another first micro macro cross? The micro lines and macro lines never crossed over." No, that is true. But the first micro macro cross, it shows you a market that goes out of sync and then a market that comes back into sync. So even though the lines technically, this is your first micro macro cross signal back here, well, I suppose this one is right here, but it didn't engage. So this is signal here that has engaged, but look at what has happened since. The market has come down, a little bit of a rally, everything is out of sync. Bar color is out of sync, trend lines are out of sync, and filter goes out of sync. Now everything is trying to come back into sync. Now at the moment we only have a warning dot. It is not a complete signal just yet. However, this also qualifies as a first micro macro cross. So something to keep in mind. And now we're into yellow bars. So it was almost flashing a green bar sell, which would be a green bar with a sell signal. See, here's a green bar with a, still got the sell warning dot. Now when you're trading a red bar buy or a green bar sell, nothing is going to be in sync. It's simply going to be a red bar with a buy signal. It's okay for one of the bars to be yellow, so long as the red bar occurs on either the warning dot or the signal bar. The green bar sell, this one may end up printing with a green bar on both the warning dot and the sell signal. But here too it would be acceptable for one of the bars to be yellow, like here. So we've got a green bar on the warning dot and then a yellow bar on the actual signal bar itself. That is fine. That's okay. But I'm hoping that the buyers are going to give us a little bit of a rally from here and try to recover the market after those silly bears tried to knock it down this morning. interesting question here from Russell. Russell's asking, do you make anything of the opposite wedge forming on the hawk? Russell, that's a really good observation, actually. What Russell's getting at is we've got what's normally referred to as an expanding triangle, or expanding wedge, or whatever. Normally, wedges form this way, right? The market consolidates a little bit, and you get this pendant slash wedge type formation. Occasionally, it will open up. Oh yeah, megaphones. Sometimes they refer to this as a megaphone as well. And it's a very interesting formation. A lot of traders ignore these types of formations, but they tend to be reversal formations. They actually, if you see the market expanding like this, there's a very good chance that the market's going to end up reversing. In fact, what tends to happen from this type of formation is that you end up getting what some traders refer to as a diamond formation, which ends up like this, where the market comes down, is going to keep retesting the lows, but each time it comes down, it's going to continue to make lower highs until it finally breaks out and completes the reversal. Now, as it does these types of things, it inevitably ends up forming your more traditional head and shoulders type formation. Right, where you've got the one shoulder, the head, or this would be an upside down head and shoulders, the head, and then the other shoulder. But yeah, Russell, that's a very good observation. It is in fact an expanding triangle or a megaphone or opposite wedge, however you want to refer to it. And yes, I do pay attention to those as possible reversals. The real tip-off, of course, is going to be the test of the extreme. The fact that this low has to hold and that the market's going to start trading higher. If I can get one more swing out of here, then at least I'll have a chance to start rolling my stops a little bit. Right now, I'm still kind of in a holding pattern. And those types of formations, they develop on all charts, really. It doesn't matter if you're looking at a end of day chart or a tick chart or a volume chart. They all end up showing you the same thing, namely that one momentum is shifting from one side to the other. Oh baby, come on, get up there. Don't make me the guy who bought the high of the day. Actually, I think somebody bid a little bit higher than I did, yes, but not by much. It wouldn't be the first time that I bought the high of the day only to watch the market reverse. But it's it's not a good feeling. I really just got to sit on my hands for the first 10, 20 minutes of the day and not do anything. Buyers trying to string a couple of bars together here. We're currently against the ATR here on the Eagle. That's my only hope at the moment. If we flip the ATR over, well, we're going to take a run at the lows here. I may have to pull the mouse out here in a second and start pushing the market higher. We're not missing a whole lot because the market's still pretty sideways overall. The hawk, a good indication of a sideways market when you see all these yellow bar little clusters printing more or less the same price level. That tells you that you're in a sideways market. Ditto here on the Raptor, which is also producing yellow bars kind of clustering together. If the Raptor produces a buy signal now, that's actually going to be a soft edge buy. That's a reversal. They're not playing nice this morning. All right, the buyers are starting to show up. there's not much going on, so it's a good time to get caught up on your emails. It's been a very congested market for the most part. Things loosening up in the afternoon, which is a little bit odd. Typically, we see the market get busy early. All right, come on, buyers. So we're emerging out of the yellow bars here on the Hawk, getting into green bars. That means we're going to be on the lookout for our first micro macro cross higher. The Falcon starting to print a little bit of a greenish bar there, just a little nub, but that may develop into a trend change signal. The Hawk, or pardon me, the Raptor, waiting for that soft edge buy. Well, actually, the soft edge buy signal printed right here on the hard edge. Hold on, let me see if I can't bring those to the foreground. There we go. So we did get a soft edge buy signal right here. That's good. That means the buyers are getting a little bit stronger, and well, next challenge right here at 49.43, and after that we're going to look for the market to attempt to recover the highs. come on. Oh dear. I'm not liking how we're floundering a little bit now. Shoot, back into yellow bars. Market getting itself very congested. So we were looking at the hawk here earlier, and you can see now we're getting this diamond style formation. Very important point here for the market. If we manage a rally, I think we're going to get some follow through. However, if things fall apart here, well, that's going to be it for the buyers. Oops. Absolutely, Natalia. Thank you for asking. Natalia has a question here about the Raptor. Okay. So Natalia is asking, hi, can you go over how the signal works using the faster moving cloud on the Raptor? Okay, the Raptor, if you don't have a double cloud on your Raptor, there is a video at the members area that shows you how to put the double cloud on. Initially, the Raptor came out with a single cloud, and then one of our Raptor owners was playing with it and said, hey, I'm getting some really good results using a double cloud on the Raptor. So we followed it for a while, and he was right. So Raptor now comes out with a double cloud, one being faster than the other. Now, when Ricardo implemented a double cloud on his Raptor, what he was doing with his Raptor is he was looking for hard edge bounces. And I should point out that Ricardo was looking for smaller profit objectives as well. He was essentially using his Raptor like a scalping tool. So if you would like, you can do that, of course. So here, for instance, the market comes down, hits the hard edge of the first cloud, comes out, produces a buy signal. Now, I don't remember rightly if Ricardo actually waited for the signal to print or whether he would start trading the reaction, in which case he would start getting in right here. But regardless, it doesn't matter. You can see that you end up getting some follow through when the market reacts to that hard edge. All right, so that's one way to use the first cloud, is just simply look for the hard edge bounce, look for the signal to print from there. Now, with the Raptor, I found that a double pullback signal tends to be a pretty reliable signal. So the market comes into the cloud, bounces, produces the first signal, retreats into the cloud again, comes out, produces a second signal. This is what I refer to as a double pullback signal. So there's signal 1, there's signal 2, and that's, again, usually when we can anticipate a little bit of follow through. If we were looking at the hawk, there's a pretty good chance that this is a 4-arrow consolidation or maybe a macro pullback. So we're getting a little bit of overlap on some of the signals, as you would expect, because the Raptor is a blending of the other birds. The other signal with the Raptor is the cloud crossover signal. Now this one tends to be very reliable as well, although I think this morning we're not seeing a whole lot of follow through. It occurs when the clouds actually cross. So the faster cloud crosses over the slower cloud. And what tends to happen when that occurs is that the market will move back into the cloud, or as Adam likes to say, the bird flies into the cloud, and then the market, or the cloud pushes the market back out, pushes prices back out. This produces a cloud crossover signal, which is right there. This also tends to be a high probability signal. Now, as I said this morning, we're not getting a whole lot of follow-through, and I think it's because that signal printed just a few minutes before the end of the opening range, the first half hour of trading, which tends to be either the most volatile or the least predictable time to trade the market, depending how you want to look at it. But that's a cloud crossover signal. Let me show you another one. Now, when your Raptor cloud starts to twist up like a rope here, and you're getting all these yellow bars and bar color changes and filter color changes, I hope you can recognize that this is a sideways market. And it doesn't matter if you get a double pullback signal. You should not anticipate any kind of follow-through. It doesn't matter if you get a cloud crossover signal. You should not anticipate any kind of follow-through so long as the market is sideways. All right, so there are going to be periods where the market is just adrift, and you need to recognize that. Here is, okay, this is a pretty decent cloud crossover. So the market comes down, we're obviously in a downtrend, the clouds cross over, prices retreat into the cloud, and come on, get out of there. So, and now they emerge out of the cloud with a buy signal. That's our cloud crossover signal. And we should anticipate some follow through from there. Now, short-lived, but we did get some. I've had people ask me, do I look at a rule of three signal with the Raptor, since it borrows the cloud from the eagle? I haven't really, but only because the cloud crossover seems to occur about the same time as we might get a rule of three style signal. A very strong signal on the Raptor as well, which will tend to occur in the cloud, is the soft edge buy or soft edge sell. So in a uptrend, we're going to have a soft edge sell. This is your counter trend signal. So with any counter trend signal, of course, you need two things. First, you need a trend. Next, you need a failure of the trend. This is what I refer to as a test of the extreme. The market attempts to regain the trend and fails. Now, sometimes this can be a little subjective. In fact, in this scenario, I would have called this little bit right here the test of the extreme. That's, to me, where the market has failed. It did come down, gave it a minor push higher right here. So technically you have two tests of the extreme. But this was the one where the buyers were really trying to regain the trend and drop the ball. The sellers pick it up and come back with a sell signal. This would be a soft edge sell, even though we're very close to the hard edge. It tends to develop as well when the band becomes very broad. This is a counter trend signal. Our first objective is normally the hard edge, but very often it will lead to a cloud crossover the other way, so a trend change, and very often it will go much further. So there you go, we've hit our first profit objective. We come back with a very quick cloud crossover. Here's another cloud crossover. And then we end up floundering around for a little bit. right? So those are your main raptor signals. And we're still just holding on here by the skin of our teeth. We did get a double pullback signal right here. So the market pulls into the cloud, comes out, there's signal one, pulls back into the cloud. Note the lower highs, produce a signal two. And now it seems as though the market is adrift again. Slightly bearish, slightly more bearish, no question about that. I really thought we were going to see the buyers push a little bit harder than they are, but of course, I can't make them do it. Well, I can, but I hate to use the mouse for my own personal gain. Sometimes it helps to hold your breath when the market gets too close to your stops. Okay, that's the best I could do. Come on, jeepers, you buyers. So we got a little bit of buying support down here, but the sellers, unfortunately for me, do seem stronger today. I'm just barely holding on, but I don't hold out much hope for this trade. I suppose if I were smart, I would have brought my stops in on this last rally. I would have been stopped out for about half of my initial risk. Oh dear, we did print a first micro macro cross here, so it's a pretty safe bet. We're going to see the market drift a little bit lower here. The first micro macro cross, of course, a very high probability signal. But overall, the market really, really flat. Come on. No, can't string a couple of rally bars together. Death by 1,000 paper cuts, that's what this is. Keith says you can say that again. I know, it's downright painful when the market trades this way. No! Get away from there. It's my fault. My fault. I got a little bit cocky out of the open. Yep. Well, like I said, it wasn't a total surprise. Made a few mistakes there. I knew as soon as this first micro-macro cross printed I was done for. It's just too reliable a signal not to follow through. I don't know, I'm not convinced that they're going to go much lower though. We've drifted here down to the primary support, and that's taken how long? Half an hour? I think it would be ambitious to say we have downside momentum. Thanks, Keith. Keith says it's not your fault, Eric. Oops. Thanks, man. Honestly, there's nothing I want to try my hand at yet. We're just too sideways here at the moment. Yeah, Francisco says, let's take a look at crude oil. Looks like crude oil is on a rally, and it is. It is advancing slowly. We got our, well, we got a very quick trend change signal here. This was the official trend change signal as we traded back to the primary resistance zone, printed a signal, trend change signal here on the Falcon, and it looks as though crude oil is going to try to get up here to the next resistance line around the 51.82 area. It does appear as though crude oil has established a little bit of a range, though. And hold on here a second, I'm going to build a chart to give you a better look at what I'm talking about. Crude oil. Okay, here is crude oil on a daily chart. Now, it wasn't that long ago, well, it doesn't seem that long ago, that crude oil would typically range between about 85 and 105 a barrel. When crude got to $85, you could anticipate that it was going to rally, and when it got to 105, you could anticipate that prices were going to decline a little bit. Now, we're making a little bit of a range, but currently it seems to be somewhere between the, well, I'm going to say 45 to 55 range. This is actually pretty high. If that 30-day range, $30 range kind of holds true, that $30 range that we used to have in crude oil, we may see crude waffle between 45 and maybe $80 a barrel, in which case there's still lots of upside here to the crude oil market. But we haven't established that sideways range just yet, not like it used to be. And that's not to say that it was easy trading crude, but pork bellies were another market when they were still around, that you could just blindly buy and sell pork bellies at a certain time of the year. And a lot of belly traders did just that. But the seasonal fluctuation of pork bellies is no longer an issue, so the market pretty much ran flat and they canceled the futures contract. Oh, now we get a rally. Scoundrels. Doggone it, and it looks like they're actually going to try to rally the market now. All right. You're going to be like that? I can be like that. We'll see. We'll see. It's still a little premature. Yeah. Christian says the buyers have come back from their Christmas shopping. Time to get busy, pay some bills. If we can see a little bit of follow through, we haven't seen any follow through. Oh, do I dare? We got a first micro macro cross higher. We're into the hard edge, of course, on the Eagle here and the Raptor. Still not getting much in the way of follow through. Oh, seems to me I said yesterday that I was going to be scalping today. Oh, I would have done better had I done that. Can reset the parameters here, get in a little bit sooner. The safest entry is above the high. Let's see what we're getting here. We're possibly going to get a trend change signal on the Falcon. And what I'm going to do is I'll take profit on one, and I'll leave the other one in as a runner. Oh, here come the sellers again. Come on. Come on. So this now is a red bar buy. And if we see a little bit of follow through here, then we should at least see the market try to retest this level. And you can draw yourself a little trend line across these highs also. Something like that. There's buyers around here somewhere. Here we go. There's a little bit of buying. Nope. Maybe not. Oh, brother. Well, the market has just dried up. I think we're going to shut down the trading room here. I do anticipate a little bit of a rally to show up sometime during this session. But right now, it's dismal, to say the least. So we're going to close up the trading room here. We'll get back together on Monday, and hopefully the market will be a little bit more active then. All right, boys and girls, have yourselves a wonderful weekend. I will talk to you next week. Bye for now.